Hey friends, it's Tony here. So I need to have a serious conversation with you about something that's been flooding my inbox. People keep asking me, Tony, is the housing market finally going to crash in 2026? Should I wait to buy? And look, I know why you're asking. If you've been priced out of homeownership, you're desperately hoping for some relief. But after digging through all the latest data, and I mean really digging, I need to be straight with you about what's actually happening. Some of this is going to be frustrating to hear, but I promise there's also some genuinely helpful information that can guide your decisions. So let's break this down together, because you deserve the truth. Before we dive in, let me tell you why I'm confident about this prediction. I've been covering housing affordability issues for years on this channel. I study the Federal Reserve data. I analyze reports from the National Association of Realtors. I track mortgage rate trends. And most importantly, I talk to hundreds of you who are living this struggle every single day. I'm not a financial advisor, but I am someone who does the research and tells you what the numbers actually mean for regular people like us. So this isn't just guesswork. This is based on real data and trends that I'm going to show you. Let me show you something important. This is a 5-year chart of the median sale price of a home in the United States. And this data goes all the way up to November 2025. December data won't be published until later in January, but we can see clearly what's been happening. Does this look like a housing market crash to you? Because it doesn't to me. When you compare November 2025 to November 2024, home prices actually increased by 0.7%. Not a massive jump, but definitely not a crash. So all those people who've been predicting a crash every single year for the past 4 years, they were wrong again. Now, I know real estate is local, so let me break this down by region. Of the largest 300 metro areas in the U.S., 98 metro areas saw home prices decline over the past 12 months. Those are concentrated in the South, especially Florida and out west. But here's the thing. 202 metro areas saw home prices go up. The gains are mostly coming from the Midwest and the East Coast. So yes, there are pockets where prices dropped, but on a national level, prices are still climbing, even if it's slowly. Now let's talk about who's actually being hurt by all this, because this is where it gets personal. Are homes still expensive? Absolutely yes. Are homes still unaffordable for most Americans? Also, yes, the median home price is around $420,000 right now. For a typical household making about $75,000 a year, that's completely out of reach without significant help. And here's something that breaks my heart. First-time home buyers have now dropped to an all-time low of just 21% of the market. The normal rate should be around 40%. Think about that. Young people are being completely locked out. And the median age of a first-time homebuyer has shot up to 40 years old. 40! That means people are waiting until middle age just to buy their first home. The National Association of Realtors is calling 2026 a situation of haves and have-nots. People who already own homes will continue building equity and wealth, but people trying to get into the market, they're going to keep struggling, and that wealth gap just keeps growing. If you're one of those people feeling stuck, I want you to know you're not failing. The system is stacked against you right now, and that's not your fault. Okay, so here's what I'm genuinely worried about for 2026, and I need you to understand this because it affects everything. The Federal Reserve has been cutting interest rates, right? Most people know that. But here's what I think is going to happen. With the new Fed chair coming in May, I believe they're going to cut interest rates even more aggressively. And the Fed has other tools they can use beyond just rate cuts to bring rates down. Now you might think, great, lower rates mean I can afford more. But here's the problem. When the Fed lowers mortgage rates, that increases demand. More people can afford to buy, which puts upward pressure on home prices. It's basic supply and demand, and it's not good news for affordability. But it gets worse. The Federal Reserve restarted money printing on December 12th. They're printing money at a rate of $40 billion a month. And guys, that is inflationary. When you print that much money, money that's backed by nothing, by the way, the price of everything goes up. Food, utilities, and yes, housing. Let me show you something disturbing. This is the money supply chart over the past 25 years, straight from the Federal Reserve. It just keeps going up and up. More and more US dollars being printed and loaned into existence. This is why stocks keep going up in the long run. This is why home prices keep going up. This is why everything costs more. The median home price back in the year 2000 was $119,000. Remember when popcorn at the movie theater was $1? When you could buy things from a vending machine with a quarter? Now you need a credit card for a vending machine. That's not coincidental. That's inflation from money printing. Here's where this gets really maddening. If people were getting 6, 7, 8, or even 10% raises every year to keep up with inflation, this wouldn't be such a disaster. But they're not. The most recent CPI inflation report said that wages are growing by 2.7% annually. That's it. And get this, they're also reporting that inflation is at 2.7%, which shocked everyone because the expectation was 3.1%. But here's the kicker. Because of the government shutdown, they had trouble collecting inflation data. So for housing inflation in that report, they just set it at 0% because they didn't have the data. 0%. That brought down the overall inflation rate artificially. Can you believe that? That's the quality of work we're dealing with from the government. We all know the real rate of inflation isn't 2.7% or even 3.1%. It's closer to 6, 8, maybe even 10%, depending on how fast they're printing money. Just look at that money supply chart. That means inflation is substantially outpacing wage growth, which is exactly why people can't afford to buy homes. Let me show you what's happening with mortgage rates, because this is critical. You're looking at a 5-year chart from the Federal Reserve. The average 30-year fixed mortgage rate is slightly above 6% right now. At the start of 2025, rates were at 7%. About 2 years ago, they were flirting with 8%. So yes, they've been falling gradually, which I predicted. But they're still a long way from the 3% and SUB 3% rates that some lucky people got back in 2022. The problem is this. The Federal Reserve has more control over short-term interest rates. Mortgage rates are at the mercy of the bond market, specifically the 10-year Treasury yield. And there's not strong enough demand for American bonds right now. If there were, we'd see rates fall. But demand is weak, partly because of higher inflation expectations and partly because of de-dollarization happening globally, which is largely due to all that money printing I showed you. So where do we go from here? Here's what the experts are predicting for mortgage rates by the end of 2026. Realtor.com, 6.3%. National Association of Realtors, 6.0%. Fannie Mae, 5.9%. Redfin, 6.3%. Essentially, they're expecting mortgage rates to stay range-bound between 6 and 6.5% for all of 2026. If you're trying to buy or refinance, I know that's disappointing to hear. But these are the projections from chief economists at major institutions. I know what some of you are thinking. Nicole, why don't they just build more homes? We have a shortage. And you're right. The best solution would be to build more housing. But it's not that simple. You would think that in a housing shortage, home builders would be swimming in profits, right? Their product is in high demand. But unfortunately, that's not what's happening. The cost to build a home has gone up dramatically because of inflation. Builders are dealing with rising costs for materials and labor. Tariffs have increased input costs even more. So builders need to build homes as cheaply as possible. But even then, they end up at a price point that's still too high for most Americans to afford. Then they have to cut their prices, which means they're not incentivized to build at full capacity. The economics of this whole housing situation are completely screwed up right now. All right, so here's my honest prediction, and I want to be completely straight with you. The National Association of Realtors is predicting that home prices will go up by 4% in 2026. And given everything I just showed you, the rate cuts, the money printing, the record high money supply that's going even higher, why would there be a housing market crash? Why would there be a huge fall in home prices? The setup for 2026 is they're cutting interest rates, they're printing money, and money supply is at a record high. That's not a recipe for falling prices. That's a recipe for continued high prices, or even price increases. I do not expect a housing market crash in 2026. I expect this unaffordability crisis to persist, and honestly probably get worse in many areas. I know that's not what you want to hear, but I have to tell you what the data is showing. If you're waiting for prices to drop 20, 30, 40% so you can swoop in and buy your dream home, I'm sorry, but based on everything we're seeing, that's probably not going to happen. So what should you actually do with this information? First, don't wait for a crash that's probably not coming. If you're in a position to buy and you find something that works for your budget, it might make sense to move forward rather than waiting for some dramatic price drop that may never materialize. Second, focus on what you can control. Work on getting your credit score as high as possible. Save aggressively for a down payment. Even small amounts add up. Pay down high-interest debt. Use tools like Rocket Money to find extra money in your budget that you didn't even know was there. Third, research assistance programs in your state. There are FHA loans that require as little as 3.5% down. Many states offer down payment assistance grants or low-interest loans for first-time buyers. I have videos on these programs. Links are in the description. Fourth, be flexible and strategic. Maybe you can't afford your dream home in your dream neighborhood right now. But what about a condo or townhouse? What about a smaller home in a different area? What about looking in those Midwest or East Coast markets where prices are more stable? Compromise doesn't mean giving up. It means being smart about what you can actually achieve right now. And finally, stay informed. Markets change. What's true today might shift in 6 months. Keep following channels like this one. Read local market reports. Talk to real estate agents in your area. Knowledge is power, especially in this crazy market. Look, I wish I could tell you that 2026 is going to be the year everything gets affordable again. I really do. But that would be lying to you, and I won't do that. The truth is, with the Fed policies, the money printing, the wage stagnation, and the fundamental housing shortage, this crisis is going to continue. But here's what I also know. You're stronger than you think. There are still paths forward, and you're absolutely not alone in this struggle. Millions of Americans are in the same boat, fighting the same fight. This isn't fair. The system is rigged against regular working people right now. But we adapt, we strategize, and we keep fighting for our piece of the American dream. Don't give up on homeownership. Just adjust your expectations and your timeline based on reality, not wishful thinking. If this video helped you understand what's really happening with the housing market, please hit that subscribe button and turn on notifications. I put out new videos every week breaking down these issues so you can make informed decisions. I've also got videos on down payment assistance programs, how to improve your credit score, and how to save for a home even on a tight budget. All those links are in the description below. And please, drop a comment and let me know what you think. Are you still trying to buy? Are you giving up and waiting? What's your plan for 2026? I read every single comment, and your stories help other people realize they're not alone in this. Thanks so much for watching, friends. I know this was heavy, but you needed to hear the truth. Take care of yourselves, keep saving, keep planning, and I'll see you in the next video.